Hi everyone. So the purpose of this video is just to make sure that you all understand what the basic accounting equation is and why it's set up the way it is. So let's write the basic accounting equation first. It is assets is equal to liabilities plus equity. And let me draw it full out for y'all because that I think will help you memorize it. And liabilities, you have debit on left and this is minus, credit on right, this is plus, and equity you have two. You have debit on left, which is minus, credit on right, which is plus, debit on left, which is minus, credit on right, which is plus. Under equity, you're going to have stockholders, and you're going to have operations. And I'm going to call it operations revenue. Now, the other things to note here and how this equation is set up is another fundamental equation of accounting. This is one that you need to memorize. This is another one that you need to memorize. It's debits have to always equal credits. And you will find that true regardless of wherever you go or whatever you do. And I want you to know something. If debits always has to equal credits, then the fact that for liabilities, minus is on that side instead of where credits were makes sense. Because if you were to put assets, liabilities, and equity into one chart, let's say you had one chart, and let's say assets were represented in blue, especially, and pluses are debits, minus are credits. So assets are blue, pluses are debits, minus are credits. Let's say you had a certain number of assets. If liabilities are represented in red, and if liabilities were secretly a plus, and credits are secretly a minus, then instead of having what would amount to be liabilities on this side, to have it balance, you get a situation where you have liabilities on the other side. And all of a sudden, debits do not equal credits. And debits are represented by DR, credits by CR. So that's why you have them on the opposite side like that. Another useful tool to just memorize that is to remember DC dealers. And it's D-E-A-L-E-R. You don't really need to know that as much. E, going to be expenses. A is assets. L is liabilities. E is equity. And R is revenue. And that, and each part of that represents where each of those are positive. So liabilities are positive under credit. Equity is positive under credit. Revenue is positive under credit. And by positive, I mean If it's positive, when you're adding a liability, when you're adding an asset to your ownership, when you're adding an equity, making it better or worse, depending on what you're adding, you put it in a positive. Positives are always in this equation when you're adding to your business. Not always in a good way. You could be adding to your business a liability. The one other thing I want to show you guys is that assets equals liabilities plus equity precisely for this reason. Liabilities and equity are all either investments on assets or claims against assets. And think about it this way. Let's say you have a home. I'm going to draw it kind of nice. For me, at least, I'm not a good drawer. Let's say you take out a mortgage on it. Mortgages from the bank are called notes payable on your end. Payable is a clue that always, forevermore, will say that is a liability. Notes are a clue of bank. Now what happens is that if you can't, let's draw it in red, if you can't pay this loan, if you just don't have the money and you go bankrupt, then the bank can repossess your house and try to recoup losses. That's where I say liabilities and equity have claims on assets. And that's why they sort of have to be equal, because you have to, in a good business, have enough assets so that you can satisfy all your liabilities and claims if you need to, or all your liabilities and equities if you need to. The other part of that is you can take like an accounts payable out for supplies. And when you do that, or even in this case with the home, when you do that, the home is an asset. And so you're investing in yourself in this case. So liabilities and equities are investments in assets as well. They help you afford this. And as a result, that's why you sort of have assets equals liabilities. That's the logic behind this equation. What you should memorize is you should memorize this equation. DC leaders or dealers, if you get a chance, and debits equals credits. But I hope in this video we have done a little bit to sort of just show you why this equation exists like it does. Thank you.